Have you ever wanted to know how to structure a wholesale deal? Well, what are we waiting for? Let's get to it. Hi, I'm William Dolan, and this is Esquire Advice, where we explain complicated and lucrative real estate and business topics. Remember, we are not forming a lawyer-client relationship by way of this channel. Always consult your local attorney before taking any action. With that said, grab a pencil and a piece of paper and get ready to learn. Welcome to our episode on real estate wholesaling in about 3 minutes. A wholesale deal is also sometimes called an assignment deal. These are the same kinds of transactions. This is where the wholesaler, or preferably the wholesaler's LLC, will enter into an agreement of sale as the buyer with a seller, but not actually ever take title to the property. Let's use an example. Let's say the sales price between the seller and the wholesaler is $100,000. The wholesaler may start shopping the property around and find someone willing to pay $120,000 for the property. Let's call this person the end buyer. What many wholesalers do is then have an agreement of sale or an assignment agreement completed with the end buyer with the sales price of $120,000. Sounds like that makes sense, right? No, that is completely wrong. The wholesaler is going to enter into an assignment agreement with the end buyer for $20,000, where the wholesaler assigns all of its right, title, and interest in the agreement of sale to the end buyer. In other words, the end buyer is going to pay the wholesaler $20,000 to take over as the buyer under the wholesaler's agreement of sale with the seller, where the end buyer will also pay the seller $100,000. So it is true that the total the end buyer will pay is $120,000, but these amounts are to two different parties. $100,000 to the seller and $20,000 to the wholesaler. Therefore, you need two separate agreements. It is also true that you could structure this as a double close deal, where the wholesaler closes on its purchase with the seller and turns around and resells to the end buyer. In that case, the agreement between the wholesaler and the buyer would be, or the end buyer as we've been calling them, would be an agreement of sale for $120,000. But that would also not be a wholesale deal. That is a double close deal, where the quote-unquote wholesaler needs to bring all of the closing funds to purchase the property before reselling to the end buyer. And in this case, the quote-unquote wholesaler would also take title to the property, even if the double close occurs on the same day. The need for the wholesaler to pay the purchase price plus closing costs and the duplicative closing costs on a double close deal are the very reasons that real estate investors will oftentimes use a wholesale deal structure over a double close deal structure. If you want more information on wholesale deals, please see our video on real estate wholesaling for a deeper dive on wholesaling, a real estate wholesaler license video to discuss licensing issues for wholesalers, and a real estate assignment agreement template video for a detailed discussion of a good assignment agreement. I hope you have enjoyed our video on real estate wholesaling in about 3 minutes. Please kindly hit those like and subscribe buttons, and don't forget to give us your comments below. With that said, thanks for watching, and I'll see you next time.